Welcome to Rajura Accounts. Today let's see depreciation, journal entries and some short problems. Let's see in this class there. So first let's discuss regarding journal entries which are associated with the depreciation chapter there. See, normally the entries what we are associated with the depreciation are something like this. The first one, these are journal entries. So first one, when asset is purchased. See, when asset is purchased, normally what will be the entry? When asset is purchased, our entry will be, what is the entry? Whatever asset we have purchased, just like if you have purchased machinery, your entry will be machinery account data 2. Because asset, when we purchase it, the amount will be a lump sum, so we should expect that we will be paying to the bank only. So our entry should be asset account data to bank. So that will be our first entry, asset account data, because asset is coming in, asset account data to bank, because money is going away from the bank account. So when asset is purchased, this is the entry, asset account data to bank. Just like if machinery is purchased, machinery account data to bank. If building is purchased, building account data to bank, something like that. Second one, for providing depreciation. See, normally for depreciation, we said depreciation is a charge there. It will be charged as an expense for the use of the asset there. So that will be charged at the end of the year when we are doing the final accounts. So every year at the end of the year, we will be providing depreciation. Then we will be showing it as an expense there by debiting to profit and loss account. So for that, our entry should be here for providing depreciation. See, asset value is decreasing. Basically, people should be aware that asset will be showing a debit balance there. Asset shows debit balance. So out of that debit balance, if something is going out, it has to be credited. So asset account has to be credited. Now which account has to be debited? Depreciation account has to be debited. So your entry for providing annual depreciation or for providing depreciation, your entry will be depreciation account data to. Depreciation account data to asset account, whichever asset it is. See, this is purely an adjustment entry, neither cash is coming in nor cash is going out, so there is no question of cash coming in this entry there. Please keep it in mind that when asset is, in other words, when we are providing depreciation, our entry should be depreciation account data to asset account. See, after this, when this particular depreciation, if you assume that the interest will be posted something like this. When asset is purchased, if we assume this as our asset account, this is asset account, if you take, this is your depreciation account if you observe. It is something like this. When asset is purchased, where will you post asset account data to bank? That means in asset account, you will post it as to bank. On debit side. Then again in bank account, we will create it. We are not showing it here. Bank account. In bank account, we will be creating it as by asset. Then when you provide depreciation, your entry will be depreciation account data to asset. So in depreciation account on debit side to that asset account, we will post it here. Whereas in asset account, we will be writing it as by depreciation. Here you will post it. Now see, at the end of the year, normally you should remember this is one particular accounting concept which you should remember, that at the end of the year, all nominal accounts will be closed and their balances will be transferred to trading or profit and loss account. So depreciation, we are going to transfer, being it the expense here, we should transfer to profit and loss account here. So when you balance this, you observe here at the end of the year what it happens. This balance you will put it here. This you will write it as by profit and loss account. So our entry will be profit and loss account data to depreciation. That means in profit and loss account it will be debited there. So that is how in final accounts depreciation account will be debiting to our profit and loss account. This is the adjustment entry we are writing. Profit and loss account data to depreciation. So our next entry will be for transfer of depreciation to profit and loss account. What will be our entry? Our entry runs like this. Our entry will be profit and loss account data to depreciation account. Profit and loss account data to depreciation account. This will be the entry. Now these are ordinarily every year these entries will be passed when asset is being purchased. This entry will write it. Every year at the end of the year we will be providing depreciation, and then depreciation will be transferred to profit and loss account if the asset is there with us. See, now and then what happens, because the asset has become outdated or if the asset has become old there, it will be sold. So next entry we should remember here is, if asset is sold for sale of asset. Okay, asset means here tangible asset we are discussing here. Okay, for sale of asset, our entry should be asset account will be showing debit balance. Normally, I have told you asset account will show debit balance. Here the balance will be there. If it is being sold, it has to get cancelled, so you should create it here. Observe here, if you have sold the asset there, what we will realize, we will receive money. Okay, cash will come in. Okay, if you have received cash there on sale of an asset, cash account has to be debited. Debit what comes in, asset is going out, asset is there account again it's going out. So our entry should be cash or bank account debtor, cash or bank account debtor to asset account. Okay, this will be the entry when asset is being sold. See, normally what happens, just like take for example, as of the date of the sale of the asset there, your asset of book value, the value in the books there is some 30,000 if you take. When you sell it, you may realize 30,000 or less than the top 30,000 or more than the top 30,000. It depends upon the situation at the time there. Take for example, if you have sold the asset at 31,000 if you have sold it. That means the difference of 1,000 is what is this? This is the profit made by you. Okay, take the other way. If the book value is 31,000 and if you have sold it at 30,000, 1,000 is the loss made by you. So you remember here, upon sale of an asset there, you may make profit or you may make loss there. If you have made profit on sale of asset, what should be the entry? If you have made a loss on the sale of asset, what is the entry? See, profit or loss, whatever you get it on sale of an asset, it should be transferred to profit and loss account. Okay, so simply if you observe here, for profit on sale of asset, what should be the entry? Just like take for example, you are having asset of some 30,000 rupees here. You have sold for 31,000. If you have sold for 31,000, your entry will be cash or bank account debtor to asset. So you write buy cash. Okay, how much? 31,000 if you take it. Now when asset is being sold out, this account you should get it closer there. Check it out here. 31,000, 31,000. Difference is how much? 1,000. This 1,000 is nothing but the profit made by you. So this will transfer to your profit and loss account. So your entry runs like this: asset account debtor to profit and loss account. Okay. So asset account debtor to profit and loss account. Otherwise, if you have made a loss there, at that time the difference will not come on the debit side here, it will come here. That also will transfer to profit and loss account. So at that time our entry will be profit and loss account debtor to asset account. So here, that's why simply we are writing a note here saying that on loss on sale of asset, what we should do, this entry should be reversed. So reverse the above entry. Reverse the above entry. This is what we should remember here. So normally we will come across these entries there. If you are able to remember these simple entries there, you will be able to do this particular chapter very much easily. Okay, so simply here you observe when asset is purchased, asset is coming in, debit what comes in, asset account debtor to bank. Okay, for providing depreciation account debtor to asset account. Okay, then again to transfer depreciation to profit and loss account, your entry will be profit and loss account debtor to depreciation. Then again, if you have sold the asset, you will receive the money, so cash or bank account debtor to asset account. If you have made a profit on sale, okay, your entry will be asset account debtor to profit and loss account. If you have made a loss, this entry you are going to reverse it. At that time your entry will be profit and loss account debtor to asset account. So normally these are the entries which you will come across here in this chapter. Let's take the short problems now. I have given the problems in the description. I request you people to go through those particular problems before attempting them so that you will understand them properly. See, our first problem reads something like this. A company purchased plant and machinery on 1st April 2018 for rupees 2 lakhs. Depreciation is written off at the rate of 10% per annum under straight line method. Firm closes its books on 31st December every year. Show the machinery account for 3 years. So it is a very simple problem, a short problem which has appeared in 2021 OU paper, Usman University BCom paper there. See, observe what he says. He has purchased one plant and machinery. A company has purchased one plant and machinery. Okay, on 1st April 2018, okay, for rupees 2 lakhs there. Depreciation is written off every year at 10% per annum. Okay, so under he is providing depreciation under straight line method. Every year he closes his books on 31st December. So he is asking us to show the machinery account for 3 years. Okay, so plant and machinery account, I have drawn it here for you. As you know very well, it's just like any other ledger account, we will be drawing like that only. This is also a ledger account, so we are drawing with the same patterns with the date particulars JF amount and date particular JF amount. Now observe here, before posting it in any particular ledger account, I request you people to go through the entries there, understand the entry and try to post the entries there. So observe here, on 1st April 2018, okay, the plant and machinery is purchased for 2 lakhs. So when asset is purchased, what is the entry? Normally, how are the entries? When asset is purchased, asset account data are to bank we said. So here asset is nothing but plant and machinery. So our entry will be plant and machinery account data are to bank. Okay, so plant and machinery account data are to bank. Okay, when it is being purchased there, see it is purchased on 1st of April 2018. So 2018 April 1st. Okay, April 1st it is purchased to bank, but it is purchased for how much? For 2 lakhs. Okay, now he says every year he is going to close his books there on 31st December. So his year starts on 1st of January and ends on 31st December every year. Now here in this particular problem, because it's a very short problem, nothing else has happened. So now at the end of this particular year, see this year is 2018. Now the end of this particular year will be there on 31st December. So on 31st December we should provide depreciation on this. Okay, we are providing under straight line method. So under straight line method we will be calculating depreciation on the original cost, the cost which is associated when we have purchased it, the cost which we have incurred when we have purchased it till we use it for first time. So on 2 lakhs we are going to provide depreciation. He said depreciation is 10% per annum, he said. So 2 lakhs into 10% if you observe the depreciation. This is for 1 year. But see, when he has purchased it on April, so how many months he has used? April, May, June, July, August, September, October, November, December. That means for 9 months he has used it. So in the first year, on 31st December, okay, 2018, we will be providing depreciation for 9 months. So how much it will be for 9 months? Check it. Come on. 10% of per annum means it will be 20,000. So 3 3 the 9, 3 4 the 12, 4 1 the 4, 4 5 the 20, 0 0 0. So 5 3 the 15. 15,000 will be the depreciation. Okay. So for 9 months it will be how much? Means it will be 15,000 will be the depreciation. So on 31st December when we are providing the depreciation, our entry will be depreciation account data to asset, depreciation account data to plant and machinery. So in plant and machinery we will post it as by depreciation account. Okay, this is for how many months? For 9 months. So if you want this calculation you can do it here also, so that you will be able to remember 2 lakhs into 10% into 9 by 12. Okay, 0 0 0 0, you strike it off. 3 3 the 9, 3 4 the 12, 4 1 the 4, 4 5 the 20, 0 0 0. 5,000 into 3 means it will be 15,000. 15,000 is the depreciation. Year is completed. So when year is completed, we will be balancing all the ledger accounts. Similarly, we will be balancing this plant and machinery account. Okay, balance this. See if you balance it, how much it will be? 2 lakhs. 2 lakhs. Now from this 2 lakhs, you subtract 15,000. It will be how much? See 5 5 10 0 1. 2 plus 8 is 10 means 1 lakh 85,000. It will be its balance there. So this is by balance carried on. From this I have subtracted this, we got this one. Okay, this is on 31st December 2018, which will become in the year next year 2019 on January 1st. It will become to balance brought down. So how much? 1,85,000. This will become opening balance. See, he has asked us to do the machinery account for 3 years. So in this year, nothing else has happened. That means at the end of the year, there is on which date? The year has started on January 1. It will end on 31st December. So on 31st December 2019, okay, we are going to provide depreciation. So when we provide depreciation, our entry will be depreciation account data to depreciation account data to plant and machinery account. So how much depreciation we should provide? We are providing depreciation under straight line method. Under straight line method, we will calculate depreciation on the original cost. Original cost is how much? 2 lakhs. On 2 lakhs, 10%, because totally from January to December 12 months he has used it. So on 2 lakhs 10% means it will be how much? It will be 20,000. 0, 0, 0, 0. See 20,000. The year is completed. Simply balance this 1,85,000. 1,85,000. From 1,85,000, 20,000 you subtract, it will be 1,65,000. So this will be your buy balance carried down on 31st December. Again you see it will become the opening balance in the year 2020 on January 1. It will become 2 balance brought down. How much? 1,65,000. He has asked us to do the problem for 3 years. So this year also we should do it. 3 years totally we should do. So in this year also nothing else has happened there. That it is with us only. So at the end of the year, it is on 31st December. Once again we are going to provide depreciation. So depreciation will be, what is the entry? Depreciation account data R2. Plant and machinery account. Again depreciation will be how much? Because we are following straight line method. Okay, under straight line method on the original cost on 2 lakhs. For how much period here? From January to December means for 12 months. So directly on 2 lakhs at the rate of 10% we are going to calculate the same amount. Okay, on 2 lakhs at the rate of 10%. So it will be how much? Once again it will be 20,000. Okay, under straight line method, every year annual depreciation the amount will remain the same. Okay, but here you might be seeing some change here. In the first year it is less, whereas in the second year, third year it is the same amount. The reason here is in this year it is used only for 9 months there, whereas in these years it is used for 12 months because depreciation is calculated based upon the time there. Okay, now balance this particular one so that this problem will be completed. It is simple problem. See 1,65,000. 1,65,000. So from this if you subtract, so it will be how much? 1,45,000. This will be nothing but buy balance carried down. Okay, on 31st December, which will become in the year 2021 on January 1, it will be 2 balance brought down. How much? 1,45,000. So this is the first simple problem which you have done it, short problem which you have done it. Okay. In a similar pattern, I hope you people have understood this particular one. See here, let's take our second problem. Okay, this is the first problem which I have done it for you people. This is the first problem, short problem, which I have kept it in the description. It has appeared in the examination for 4 marks. 4 marks there. See, simply if you do this much problem there, you will be able to get 4 marks there. It is so simple. Okay, come on, let's take our second problem. Second problem also, I will do it here only. It is also a short problem. So simply I will rub this particular one. Let's take our second problem. What does the second problem say? You observe, calculate depreciation for 4 years on reducing balance method on plant and machinery costing rupees 4 lakhs at the rate of 10% it says. Okay, so what is asking? Calculate depreciation for 4 years. Okay, on reducing balance method on plant and machinery costing 4 lakhs at the rate of 10%. See, this question it has appeared in BCom Usmania, okay, in June 2018. So simply what he has asked to see, calculate depreciation is said for 4 years on reducing balance method on plant and machinery costing 4 lakhs is said. Okay, it is so simple to know here. He is asking us to calculate the depreciation for 4 years. Okay, so how we are going to calculate the depreciation for 4 years? See, he has not asked us to do the plant and machinery account there, but he has asked us to calculate the depreciation. So I will drop this particular one so that you will be able to know how to calculate. But there is no need to do the account here. He has asked us to calculate only the depreciation amount there. So depreciation amount, how we are going to do? See, this is for second problem. This is second problem. We are doing it here. So for first year. So for first year, depreciation. How do you calculate depreciation? Observe here. Depreciation we are going to calculate as a percentage on the cost there in the first year. So for 1 year's use, okay, the cost of the asset is how much? 4 lakhs. Okay, so depreciation amount is on 4 lakhs. Depreciation rate is 10%. He has purchased on which date? He has not said the date there, so we are assuming that this purchase is the beginning of the year. So for 4 years, he is asking us to calculate depreciation. So for first year, depreciation amount will be how much? 4 lakhs into 10%. It will be how much? It will be 40,000. Okay. Whereas for second year, if you observe, second year depreciation amount, how you are going to calculate? See, first year it was 4 lakhs. Second year, under diminishing balance method, every year we are going to calculate depreciation on the written down value or the value in the beginning of the year. That means 4 lakhs minus 40,000. How much it is? 3 lakhs 60,000 it will be. Because in the first year 4 lakhs was the book value. From that first year depreciation 40,000 is gone. The remaining is how much? 3 lakhs 60,000. On 3 lakhs 60,000, 10% if you calculate, how much it will be for 1 year? It will be 36,000. Right? Then again for third year, if you observe, the depreciation will be how much? Depreciation amount will be, see, in the second year the book value of machinery was 3,60,000. In the second year the depreciation was 36,000. So what is the value now? See, 3,60,000 minus 36,000 if you do it, how much it will be? 10 minus 6 is 4, 5 minus 3 is 2, 3. 3,24,000 is the value in the beginning of this particular year. So on 3,24,000 into 10%. So how much it will be? It will be 32,400. So like this, every year after deducting the depreciation amount, whatever balance is left over, okay, balance is left over, on that we are going to calculate the depreciation. So he is asking us to calculate depreciation for 4 years, he said. So this is the third year. Okay, now you try to calculate it for the fourth year, how much will be the depreciation amount here. So depreciation amount for fourth year, you are going to calculate something like this. Okay, this was the book value. Okay, this was the book value in the beginning of third year. How much? 3,24,000. Okay, from 3,24,000, what is the depreciation was provided in this year? It is 32,400. If you subtract, it will be how much? 3 minus 2 is 1. 12 minus 3 is 9. 2. 2,91,000 is the balance of the asset at the beginning of the year. So on 2,91,600, you are going to provide once again 10% for 1 year. So how much it will be? It will be nothing but 29,160. Okay, so like this, year after year, we are going to subtract the depreciation for that year from the value of the asset in the beginning of the year. Okay, that is a WDV. Just like in the first year it was 4 lakhs is being purchased. First year we have provided depreciation of 40,000. So in the beginning of the second year, the value of the asset is how much? 4 lakhs minus 40,000 is 3,60,000. So in this year we are going to provide calculate depreciation on 3,60,000. Okay, it will be how much? 36,000. Whereas in the third year, from the 3,60,000, second year we have provided 36,000 depreciation. So the remaining balance is 3,24,000. On this we have provided depreciation for 1 year at the rate of 10%. So it is 32,400. Whereas in the fourth year, see, from 3,24,000, 32,400 we have provided depreciation. The remaining is 2,91,600. This is the value of the asset in the beginning of the fourth year. On this we have provided 10% depreciation, which amounts to 29,160. So this is how we are going to calculate depreciation under reducing balance method or diminishing balance method. The first problem was on straight line method. Now this is on diminishing balance method. I hope you have understood the problem. Okay. Similarly, let's go through. These are all the short problems which we are doing it. See, let's see the third problem. See, third problem, what it says, calculate the amount of annual depreciation for 3 years by diminishing balance method. Okay. So he is asking us to calculate under diminishing balance method. But to confuse you people, he has given calculate the amount of annual depreciation for 3 years by diminishing balance method. Cost of the plant and machinery 5 lakhs he said. Expected life 4 years he said. Rate of depreciation 20% he said. Scrap value 50,000. Okay. Now here you should not get confused there between straight line method and diminishing balance method. In this short problem, simply to confuse you, because this question is given in our 2017 BCom Usmania paper there. See, to confuse you, he has given the expected life against scrap value. Now these things, expected life, scrap value, these are usable to you to calculate depreciation under straight line method, not under diminishing balance method. So under diminishing balance method, simply the rate of depreciation is given 20%, so that you can apply like this and you can calculate the depreciation there. Okay, just like fourth problem if you take. See, this is not fourth, this is the third problem. Once again I am showing it here, only observe for third problem. See what it says, calculate the amount of annual depreciation for 3 years under diminishing balance method. Here also he is asking us to calculate the amount of depreciation, but he has not asked us to do the machinery account nor any other account. So simply do calculation like this. So for the first year depreciation, how much it will be? In the same manner, I am rubbing this one. In the same manner we are going to do this particular one also, so that it will be clear to you people. Okay, here also you are following diminishing balance method only. So under diminishing balance method, see what it says, cost of the plant and machinery is 5,50,000. So 5,50,000 is the cost of the machine. Now here depreciation is provided at the rate of 20% per annum, he says. So first year it will be 20% total. For 1 year he has used it 20%. Okay, calculate how much it amounts to. 0, 0, 0, 3 zeros. 2 5 are 10, 0 1 carry, 2 5 are 10 plus 1 11, 1,10,000 is the depreciation. Okay, for first year. For second year depreciation will be how much? Now observe, we are following which method? Reducing balance method. What I said, under reducing balance method, every year we are going to calculate the depreciation as a percentage on the balance of asset in the beginning of the year. Okay, which is nothing but we require it as written down value. The written down value, how you will get? The balance of the asset less depreciation. Okay, we will get a written down value. So in the first year 5,50,000. Okay, 5,50,000. This was the value. Further depreciation of 1,10,000 you have subtracted. So remaining is how much? You are having how much? 4,40,000. So in the second year on 4,40,000, we are going to calculate depreciation at the rate of 20% again. Observe here how much it will be. 2 3 zeros. 2 4 the 8. 2 4 the 8. 88,000 is depreciation for second year. Okay. Now third year you observe there in the similar pattern you try to calculate. The balance of asset was 4,40,000 in the beginning of second year. This year depreciation we have provided 88,000. So if you subtract 88,000, how much it will be? 10 minus 8 is 2. 13. 13 minus 8 is 4. No, this is 13. 13 minus 8, 6, 7, 8 means it will be 5, not 4, 5. Whereas here it will be 3, 3,52,000. So in this year, on 3,52,000, we are going to provide depreciation to the rate of 10%. So how much it amounts to? Check it, 0, 0, 0, 0, we have stuck up. So 2 zeros. Okay, so 2 zeros. Then again 2 to the 4. 2 5 are 10. Carry 1. 2 3 are 6 plus 1. 7. 70,400. See, for fourth year, because for 4 years he has asked us to calculate. For fourth year depreciation amount, how you will calculate? Now you try to understand this one. 3,52,000. From the depreciation you have provided how much? 70,400. So if you subtract 0, 0, 10 minus 4 is 6. 1 is left over here. 15, 15 minus 6, 7. If you take it out, it will be 8. So here it will be how much? 2. 2,81,600. So on 2,81,600 at the rate of 20% you calculate. So how much it amounts to? 0, 0, 0, 0 are stuck up. Now 2 0 the 0. 2 6 the 12. Carry 1. 2 1 the 2 plus 1 is 3. 2 8 the 16. Carry 1. 2 to the 4 plus 1 5. 56,300 is the depreciation for fourth year. Okay, so this is how we are going to do the problem here. Okay, this carries 4 marks for UC. Simply the concept you should understand here is, under diminishing balance method or reducing balance method, we are going to calculate the depreciation as a percentage on the balance of the asset in the beginning of the year, which we refer it as a written down value, WDV. That WDV we will get by subtracting the depreciation of that year from the balance of the asset in the beginning of the year. See, First it was 5,50,000, depreciation 1,10,000 we have subtracted. We got 4,40,000. On that we will provide for second year. Second, then again for third year you see 4,40,000 minus 88,000. We got 3,52,000. On that we are going to provide. So in this particular manner we are going to provide depreciation under reducing balance method. Okay, so that is our fourth problem. And now fifth problem is also a simple one here. See, sorry, fourth problem. A fourth problem, short problem, is a very good problem there. Please go through that fourth problem. See, I hope you have understood this particular third problem. I am wrapping up this particular one. Come on, let's take one short problem, another short problem, fourth problem. But this is a good problem there. Please go through. A machine was purchased on 1st January 2014. Depreciation was written off at 10% per annum on diminishing balance method. At the end of 2014, the depreciated value of asset is 72,900. Find the cost price, he said. So simple here. Okay. Normally you should understand that it is purchased on which date? It is purchased on 1st of January 2004. That means on 1st of January 2014 it is purchased. Now on 31st December 2014, what it says, its value is how much? Depreciated value means after deducting the depreciation, the balance left over is how much? He has given it as 72,900. Okay. And he said depreciation they are going to provide at a rate of 10% per annum on return on value method. Okay, it is only for 1 year. So simply you should understand here. What is asking? What is the cost price of the asset? For how much he has purchased it, he is asking it. So simple. Okay, you understand like this. Cost price, it is a short problem. Cost price, this is depreciation, and this is the depreciated value. Okay, depreciated value. How we are going to calculate? Observe here. Depreciation rate, how much he said? 10% he said. Percent means 100. That means if 100 is the cost price, depreciation 10% he said. That means 10 rupees out of this will be depreciation. Then after providing depreciation, the depreciated value, that means after deducting depreciation, the remaining will be how much? 90. That's what you should understand here. Okay, once again I am reading the problem. A machine was purchased on 1st January 2014. Depreciation was written off at 10% per annum on diminishing balance method. At the end of 2014, the depreciated value of asset is 72,900, he said. That means depreciated value. That means after deducting the depreciation, the value is 72,900, he said. So what I have done, see, depreciation rate when he said at 10%, that means if 100 is the cost price, 10 rupees is the depreciation. That means 10 rupees if you deduct from 100, the depreciated value will be 90. So that is the equation which he is following. Now what he says, after providing depreciation, the depreciated value of the asset which he is having is 72,900, he says. Now he is asking what is the cost price. So simply put a equation like this, put a question mark here. Okay. Now for the time being, you forget this particular one. If this is 100, this is 90. If this is this much, how much is this amount? Okay. It is nothing but here cross multiplication you should do. This amount into this amount. Okay. 72,900. This one into 100 divided by 90. Okay. Now for the timing of forgetting this one. Okay. Cost price is 100. Depreciated value is 90. Depreciated value is 72,900. How much is the cost price? 72,900 into 100 divided by 90. Okay. Calculate it. You will be knowing it. Okay. Which table will go? Okay, you get some value here. You can understand here. 7, 7, 81. In the 9, 8, 72. 9, 1, 9. Okay, this 0, this 0. So, and another one 0 is there. So, totally 81, 0, 0, 0 into 10. So, 81,000 is the cost of the asset. So, simply you will say cost of asset, cost price is how much? 81,000. That means if 81,000 is the cost price, 10% depreciation is provided. After deducting the depreciation, the remaining value will be 72,900. Okay, it is so simple to understand. Okay, simply he has checked it whether you will be able to calculate it or not. Okay, so the problems are simple. In our next period there. In other words, tomorrow, okay, I am going to take up some main problems there. I want you people to follow this particular one clearly, because I am discussing most of the questions which have appeared only in the examination only. So please go through this particular one. Thank you. Do subscribe my channel. Please like it, share my videos. Thank you.